Hi everyone, welcome to JEDi episode 13. My name is Jimmy and with me today are Ethan and David. For those of you who tune in to our Facebook Live for the first time, and if you want to know more about us and the name JEDi, do check out our first episode in the video section. I will be the moderator for this episode, so here's how we're going to run through. Firstly, Ethan and David will be having a fireside chat on investments part 2. And then myself will be covering a bonus section on how to open a Tiger Brokers brokerage account. Then last but not least, we'll have a Q&A section. So feel free to post your questions in the comment section below and we'll address them later during the Q&A section. So without further ado, I'll let Ethan and David start the ball rolling on the fireside chat. Right, guys?
Okay, hi everyone. I'm Ethan, the founder of PolicyWoke. So today's content will just be talking about investment part 2, which is mostly about risk and reward. So this is a table of contents. So we just go into what is a risk profile. So what is a risk profile? Is basically how much risk you can take with the money, the time, and the resources that you put in. So it sounds very simple, but a lot of people may think that they know their risk profile, but in reality, they may exhibit a different kind of behavior. So that's why it may or may not be straightforward in this case. Okay. So what is exactly a risk profile? It's an indicator for volatility. So basically, it talks about how much volatility you can take in your investments. So if it goes up 100% or it goes down 99%, can you take it or not? Yeah. So basically, that is what it is all about. So, but before we continue, we would like to understand what does risk profile mean to you. So maybe you can tell us what do you think that, how do you determine your own risk profile? So for us, in our opinion, it's more about how we can sleep soundly without being affected by investment gains or losses. Because I think we have heard a lot about people who lost money in the stock market. There's always two kinds of a reaction. One is, 哎呀，它会上的, you will go back at one. You don't have to bother about it. But the stock price keep going down. Then you'll be like, 哎呀，不用管它的, don't bother about it. It's like you don't bother about it, you magically disappear or you magically turn back into the stock price that you want. I don't know, but yeah, that's the first reaction. Okay, the second reaction is I have done my due diligence. I understand the fundamentals of the company. So even if it goes down, I'm not affected. If it goes up, how much did it go up? Wait, I need to know. So maybe I can start thinking from it. Yeah. So that's the two kinds of different response. So it also includes the time and the mental fortitude. When I say time, it's more about the time horizon that you have. So if you are a retiree, you don't have much time on your side, honestly speaking. But if you are a young person, you have all the time in the world that you want before you reach age where you will be needing this investment. So you need to understand that. So let's go on to number 2, which is what is risk reward. I think this was partly covered before when we talked about insurance planning. So when we had the guest, Glenn, over there, he also talked about this. So we'll expand a bit more in this section. So risk reward is still tied back to the volatility. So it's a way to optimize the amount of risk that you do for each asset allocation. So what we are always looking at theoretically is the highest reward for the lowest risk. So if let's say in technical analysis, you'll be saying like, oh, it is at the support level, then I buy. Then if it's at the resistance level, maybe I will sell already. That kind of idea. Okay. But okay, number 2, when we talk about reward, right, it's based on the potential perceived gains. Because nobody will know your stock will go up how much. For example, Kodak, I don't know what happened to Kodak.
Correct.
From $2, suddenly, I don't know what happened also.
There were
Crazy.
two things. One was the blockchain a few years ago. Then a few days ago was the Trump loan.
Yeah, so this kind, right? Can you perceive that kind of gain actually? Can you expect it?
I never touch. Don't dare to touch it.
Nobody will dare to touch it. Yeah, so it's perceived. So it's more about how much you really know that will go up potentially. So in finance, it's about the returns that you expect from the risk that you're taking. So to further compound this concept of risk reward, before that, Jimmy, maybe you want to share a bit on how you determine your risk reward also.
Risk and reward.
Yeah.
So for me, okay, so because the fact that when it comes to investing or even trading, right, no one can achieve 100% win rate, right? So that's impossible. So the next best bet is to have and what you call an edge in the markets. Okay, so it doesn't matter what investing strategy or what trading strategy you have, but the important part is when you set your amount of risk and when you set an amount for the reward, it has to be such that your reward has to be at least equal to or greater than the risk that you're taking, so that as you invest or trade multiples of it with greater reward than the risk, it can be such that even though your win rate is slightly less than 50%, so let's say even 40 or 45% win rate, your overall reward will have covered all the risks that you have taken up. Yeah. So it's basically math. You have to have a greater reward than the risk.
In a layman kind of return, let's say that, which means if I'm willing to risk $1, I must be able to get at least $1 more.
Yeah. Or even more than $1.
Yeah. So I expect that stock price to go up to $2.
Yeah. So back to the stock example. So let's say if a stock is $1 and then your cut loss price is, let's say, 50 cents. So if your cut loss is 50 cents, your take profit, or rather your selling price target, has to be at least 150 or even greater. Okay, or you have to even slightly more than 150 because to cater for the brokerage fee, right? So it has to be greater than 150, slightly greater than 150 at least. Yeah.
Sure, understand. Thank you, Jimmy. Okay, so just to compound or to add on to this idea of risk reward, right? We also talk about efficient frontier. It's actually not very alien to a lot of people, especially people in the finance sector. So, but just for understanding it, efficient frontier is actually the concept of getting the most out of the least risk. So it can be two ways. One is I maintain the same risk, which means, let's say for Jimmy, he say I'll cut loss at 90 cents for every $1. So I can maintain it, but my returns can go up. So that is trying to achieve the efficient frontier. Or the other way is, okay, I maintain my reward at $1.10. But my risk, instead of 90 cents, my cut loss becomes at 95 cents. I'm very confident that it can achieve that. So normally how people do it is like spreading between 10 bonds at 6% returns. So the risk of default is a lot less than maybe you just buying one bond. If you sway is the high flux bond, you also pong lah. But if you have 10 bonds, only one of it is high flux, you still have that 9 bonds giving you 6% returns. So at least the risk taken must justify the reward. So that is more about the efficient frontier. Okay. So let's move on to the common strategies that we see in the investment. Okay, for this, we are only talking about the common strategies. We are not going to dive deep into how they're going to execute it, but just more of an introduction, so that at least if you are really interested in trying to explore what are the kind of strategies that you can employ, you can actually go into this to read up further. And if you have any other questions, hopefully we can answer them, because we are not all experts in everything. At least for me, I'm not an investment expert. So if you tell me about what Bogleheads 3-head fund, whatever, I know about it, but you tell me to tell you exactly how to execute it, what are the things to buy, I can tell you, I cannot tell you at all. I'm an index person for stocks, really. So that's how I can do it. Okay, so let's go into it. Okay, the first one is Bogleheads 3 portfolio strategy. So basically what it means is about having 3 different assets, okay, to form your whole asset allocation. So one of it is equities in the locals, or basically the risk is actually spread within the local market. Okay, the second one is the global market. And the third one, it depends on what you think about it, but most of it is in bonds, at least from what I know. So because there's two pots of asset equity, so the last pot is in bonds, and normally it's in global bonds. So this is a way to hedge your risk, because you have local shares that is domiciled in your local currency, and two in probably most likely the US, because the US currently the biggest, or maybe you can split between US and China renminbi. So it depends on how you form a strategy, but the basic idea is more about that. David, you want to add something? Sorry, David?
Maybe not China.
Maybe not China. Why?
Have you heard of Luckin Coffee?
Yes, but that one is due to due diligence issue. The market is okay. It's the company accountings with a lot.
Might be a culture issue.
Possibly, but Tencent and Alibaba, I don't know lah. It works lah. If you don't want China, maybe Hong Kong lah. I don't know, but Hong Kong is going to be X. So I don't know where to put my money also lah, honestly speaking. If you ask me, that's why I tell you I cannot advise on it. Okay, so that's for the first strategy. Okay, the second one is more about the risk parity. Okay, risk parity is more about leveraging on a lower risk or the same risk for a high return. So it's actually built upon the efficient frontier, meaning to say I want to achieve, let's say the same risk. So I just leverage, I borrow money to buy on the same portfolio. So what is introduced over here is actually just interest rate risk, or basically the gear up. You're gearing up. They're loaning money. So there's the interest rate that you need to pay. So you're just introducing one more aspect into your efficient frontier. So it's not that bad. So your reward is definitely higher because you are leveraging, but your risk was to be slightly lower as long as you can pay back the loan in the shortest amount of time. So let's say even if your loan is at 10%, if you can repay it back in 6 months, what is the actual interest incurred? Near to 5% only. So that's why it's still okay. It doesn't eat into your returns a lot as long as you have the amount of money to pay it back. So that is about the risk parity and efficient frontier. Okay. So the third strategy is I don't want to be bothered with all the DIY thing. I do my own. I don't want. I scared. So people will actually go into this either robo-advisers where they manage the funds. So for stash away especially, okay, I shouldn't be talking about products. Maybe I cut that out. Not most robo-advisers actually look at your time horizon. Then they pack the appropriate amount of volatility to it. Yeah. So if your time span is very short, or if the money is, for example, your emergency fund, yeah, they actually pack it to a cash account instead. They tell you put it in a cash account. Don't take risk into equities, don't take risk into bonds, all that. Because you don't have the time. What if you need to draw the money instantly the next day?
Ethan, what's the rate for cash account?
Currently is hovering between okay, depends on which brokerage or which robo-advisor you're using. But it's
So
about
3%.
definitely less than 3%. Definitely.
Okay.
Yeah.
Is projected wise is about between 1.9 to 2.2 or 2.3%. Yeah.
Yeah. So
Although
it also depends on which robo. Some is only 1%, but it's really cash account. That kind. It's pure cash, which means there is no fund that is in it. So that's for robo-advisors. And the fourth one is I trust a human more. So I get a financial advisor. The financial advisor manage the funds for me.
Okay.
So this is more typical, still in the going, but it's slowly changing. So it's actually dependent on the individual financial advisor's competency and the trust that you put into him. So definitely you can earn slightly higher fees. So if you can find a one that has very low fees, you also tell us. We also want to know. Correct or not? If you can get anything lower than 1%, it's quite cheap already. So yeah, let us know. We also want to know more about it. So if you can manage to find it. Because for robo-advisors, they are charging at 1%. Even with some
on
is
average,
0.4.
on average, I would guess.
Yeah, on average. It can be lower if it's like your AUM asset under management, or you invest a lot, like maybe 300,000, 500,000, it can drop to 0.4% also possible. Yeah, that's for robo. So for FA, it's a flat rate. But you have to think about it. If they manage for you, are they able to beat the returns of robo-advisors or not? Yeah, so I think this was also covered by Glenn before. Like if you want robo-advisors give you 5%, your FA must at least give 5% plus the fees plus a bit some more. Because why should I trust the FA with it when I can just put a robo-advisor? Yeah. So that's something you have to consider also. Yeah. So if you need more resources to all these like robo-advisors, FA, you're just a few type away. So you can just type robo-advisors, enter, you can search, there's tons of it. If you want a FA manage, you can just look, I want a financial advisor to help me manage my funds. A lot of people will PM you already. But so sorry, we don't do PM. You PM us, okay. We PM you better not.
The thing about robo-advisors is sometimes they make changes that you might not understand or agree with. So recently there was a change where a fund actually increased their goal allocation up by 20%. And some people were not too happy about it because they lose out on the rise in the equity markets. So, and initially when they invested, they wanted to have full equities exposure. But after this change, I think some people were not too happy about it. But recently, I think over the past 1-2 weeks, gold has rose quite a bit. So maybe it balanced out for these people.
Yeah, so if you look at it, when you have a robo-advisor, you have to trust their concept behind it. So you shouldn't be angry or what, because they are considered, they are in the market for so long already. So if you really think they can do it yourself, then yeah, number one, do it yourself. Do the Bogleheads, do your risk parity, leverage it for yourself. You can do DIY everything. Oh yeah, one more thing, before you DIY, the most important thing is to understand your wage per hour. Because if you DIY, minimum you must at least have 100,000 to start DIY. Else, your time could be better spent at doing better at your job, earning more pay to get your 100,000. Then you do your own investment probably.
I always thought you should have more than 100,000. 100,000 I think is not enough.
Oh, okay.
It will be enough for a person with very minimalistic life, no loans, spend $500 a month, that kind of person.
You're talking about 100,000 as the wage or 100,000 as the AUM?
AUM.
AUM.
Not enough lah, because let's say you make 10% in 1 year, we're talking about 10K. How do you spend 10K in 1 year?
But I say it depends on the person, so that's why I say minimum. You don't even hit the minimum, don't bother about it lah. Yeah.
Unless you're saying that your expense is like 10K per annum, then that would make sense.
Yeah, but you divide by 12.
And that's assuming you make 10% per annum lah.
Yes.
Okay. So, yeah, correct.
So we are actually pushing it already. That's why I say if you don't even have 100,000, you want to DIY, you sort already at least. At least in my opinion, I was like thinking, how the hell 10,000? Yeah. So David pointed out something which is very, very good. That's why if you really want, aim for a lot higher. But 100 is really the minimum of the minimum.
Very minimum, yes. But you should look at your expense first. If your expense is maybe 5K a month, then you know that you need 60K a year. So if you think you can make 10%, which might be a bit optimistic, then you need at least 600K. So to be conservative, maybe make it 900K instead. So that's 1.5 times. So maybe you don't make 10%, which is I think is a bit high. So it's probably safer to have 900K if your expense is 60K per year.
Yeah, so there's some simple math for you guys. Hopefully you understand what we are trying to say. So focus on your job first, because that is the one that gives you the most money for now. Yeah. So if you don't have that, don't think about it. So I would probably lean towards Robo or FA managed ones at the start. Then slowly, if you really think that you are very interested in investing, you love investment concepts, you want to know more about it, you want to dip your hands into all this, don't know what trading, forex, value investing, goal-based investing, whatever investing, then it makes sense later on, but not at the start of your life. Unless you aim to be a fund manager. Okay, then they are different. Yeah, maybe. Yeah, you can start first. Okay, so we have come to the bonus section. So for today's episode, Jimmy will be the one that will tell us the bonus. So up to you, Jimmy.
Okay, thanks Ethan and David for the fireside chat. All right, so now let's move on to the bonus section on how to open a brokerage account with a new player in the market called Tiger Brokers. Okay, so now let's move on to the next slide. So before I move on to the steps, let's talk about what Tiger Brokers is. Next slide. Okay, so what is Tiger Brokers? So for some of you who are not familiar, Tiger Brokers is relatively a new broker player in the Singapore market. It's a mostly online stock brokerage, and that is backed by 3 big investors. Interactive Brokers, Xiaomi, and Jim Rogers. And it's also a listed company under the symbol TIGR. in the Nasdaq. Okay, then this page is a MAS website that shows that Tiger Brokers has a CMS license issued by MAS with the source link below. Okay, then next. So with Tiger Brokers, you can invest in various markets, mainly in the US, Hong Kong, Singapore, and China A shares. You can also trade in US stock options and futures. Okay, so now let's move on to the step-by-step on how to open a Tiger Brokers brokerage account. So from this page is from the website tigerbrokers.com.sg. So from this website, so there are two ways to sign up. So either from their website, you click open account, or you may get a referral link from a friend of yours. Okay, so click on that link. So after you click on the link or you click open an account, you'll bring you to the next page whereby you register via email or a phone number. Okay, if you choose so if you choose email, which I did, okay, you'll receive a OTP via email, okay, which you have to enter it as part of the sign up process. Okay, so after you enter the OTP, you go next. Okay, so next is actually next step is on you need to key in your nationality, your tax residency, and then next step is either you fill up your particulars via MyInfo or you fill up manually. Okay, then next step. Okay, so in the sign up process, I chose MyInfo. So in the MyInfo, all these fields like name, date of birth, and gender will be filled up for you. Okay, so in addition to that, you need to fill in the phone number bind, which is your own contact number. And then after filling your contact number, you need to enter another OTP, okay, which you'll receive by SMS. Okay, so after you enter SMS, you go next. Okay, then go next slide. Okay, so after that, the next step is your employment status. Okay, so in my case, I'm currently a shareholder of PolicyWoke Private Limited. So this is how I fill up. Okay, the next step is whether you want to apply for a margin account or not. So margin account is basically a CFD account, whereby you want to trade on margin. So this is for those of you who want to trade US options or futures. Then you need to click yes for margin. So for me, I don't want to trade options, so I choose no. Okay, so next. Okay, so next step is the declaration of your assets and your income. Okay, and then there's this step whereby you have to, if you have not done so, you need to complete the SGX online education program, and the passing rate is 75%. So in my case, I have filled up before, I believe. Last time when, I believe it is the same education program that I need to complete when I open an Endowers account. Hopefully I remember correctly. So that time I only make one attempt and I passed 100%. So for this step I make one attempt with 100% pass. And then next. Okay, so next is the other declarations like the risk warning and the consent to e-notification and so on. So if you are okay with it, just click agree to all. And then the right side is the W8 band form, whereby you need to fill up for trading in the US markets. Okay, next. The next is actually the CRS, the certification of tax residency status. And then after that, then is almost the last step where you can go to your account. Okay, next. Okay, so after you have completed all the following steps, you should be able to see your account dashboards with the status under reviewing. and then you'll receive an email from Tiger Brokers that to complete the sign up process, you need to download a mobile app. Next slide. So to complete the verification status, you need to set up a mobile app with the face recognition. Okay, and then meanwhile, before or after you've done this, right, within 1 hour, you should be able to receive an email that the account opening is successful. So in the dashboard, you should see status account opening successful, which is within 1 hour. And then you'll receive, next slide, you'll receive an email that the account opening is successful, yeah, from the CEO himself, Mr. A. Okay, so this sums up the most of the process of how to open a Tiger Brokers brokerage account. Yeah, so with that, we come to the end of the bonus section. So we hope you find our presentation so far valuable for your own investments and the account opening if you are keen to open a Tiger Brokers account. So with that, I'm going to, okay, sorry, give me a while. Okay, so with that, we come to the end of the presentation. So we'll now go for the Q&A session with regards to investments and the account opening. So if you still have any questions, now it's time to post them in the comment section as we are now addressing them. So do we have any questions so far? Let me have a look first. Okay, so far there is no questions. David, do you have any questions, or even Ethan? Do you have anything to add on?
So why are we sharing Tiger Brokers when we talk about risk and volatility?
Why? Ethan, got anything to add?
Okay, basically, once you know your risk and your volatility, right, then it's time to start doing something. You can either do it yourself through Tiger Brokers, or maybe Interactive Brokers, or some other brokers, or you can start to talk to someone that you wish to invest your funds. If you are a stanch person who wants really someone to help you, you can consider all the robo-advisers. So why we do it for this episode is because we want people to start taking action already. I think from the way that we structured the JEDi episode, it should be from all the way from knowing your cash flow, your asset allocation, until now starting about investment. You should have all the basics already at the minimum. Yeah.
Okay, so I just want to point out one thing, which is some of us, when we first know of Tiger Brokers until today, right, some of our friends have written their reviews about Tiger Brokers, and most of them wrote that Tiger Brokers has a pretty intuitive user interface to help you in your investing and trading. So even though it's intuitive, but that doesn't mean that you can invest or trade as and when any stock or any asset that you want to invest or trade. So the onus is still on yourself to invest and trade carefully. With regards to trading, just be careful not to over leverage. So if you over leverage and your account got into a margin call, it may cause all your funds in your account to be wiped out. Yeah, so just be careful when you are trading or investing using Tiger Brokers, even though the user interface looks pretty intuitive to you. Okay, so just
you open a cash account, right? Does it mean,
yeah, for me,
There's no
For me,
leverage.
I open a cash account, so there's no leverage when it comes to investing. Yep.
So how long did it take for you to get funded?
I haven't found my account yet. It's only account opening. Yeah, I haven't tried funding account. Yeah.
For me, it was about within 1 business day, or if it's during office hours, it's usually within 1 or 2 hours.
Right. Okay. So, talking about the funding, right? Maybe I want to highlight just a heads up. If you want to invest in stocks, that is not denominated in Singapore dollar, which is, let's say you want to invest in US stocks or Hong Kong stocks, you need to first convert your funds into that corresponding currency. For example, Hong Kong dollar for Hong Kong stocks or US dollar for US stocks. Convert the currency first before you submit an order to invest in a stock. Otherwise, tiger brokers will actually so-called create instructions to borrow currency to invest in the stock, and that will incur interest in the borrowing cost, which may not be what you want. So just a heads up, remember to convert the funds into the corresponding currency first before you invest in the stock of that currency. Yeah. Okay.
Does this apply if you are in a cash account?
Mm-hmm. Yep,
so if you have a cash account, will that still happen? Will there still be interest?
Yes. If you don't convert, and then let's say you don't convert to US dollar, and then you go ahead and submit order to buy US stock, you actually borrow US dollar to invest in the US stock, and that will incur daily interest. Yeah.
For me, my account is margin, so I have no idea how cash account works.
Oh, okay. For you, it's margin. Then I'm not sure how it works. But for cash account, yeah, I believe some reviewers write that will happen if you don't convert first. Yeah. Because cash account no margin,
margin account.
Because you need to borrow somehow. Yeah. So
I think the interest is quite low. So far my total accrued interest in 1 month is less than $20 US.
That's probably because the borrowing cost is not as high as you think it is. That's why.
Yeah, it's 4% per annum.
Okay, right. And it's calculated daily, I guess.
Correct.
Yeah. So although the borrowing cost is low, but doesn't mean you can ignore. Just be mindful of the borrowing cost if you invest without converting the currency. Yeah.
Margin is helpful.
If you know how to multiply the return on the investment or trading, yes lah. Yeah. If you know how to do it.
To me, it's more like convenience because let's say you're not sure whether you want to convert your Sing dollars into US dollar. You just put it there in Sing dollars, and it's just like a hedge for your overnight risk. Then, if at least let's say if your stocks or what they go against you, then you don't get liquidated. So you leave it as cash, no problem.
Right, true. Okay, true. Ethan, got anything to add? Don't have. Let me check. Ethan, is there any questions from the watch party you shared?
No.
No questions. Okay, no questions from the main page also.
Let's have a earlier holiday.
Yeah. So if there's nothing else, then so if there's no more questions, then we're going to end this Facebook Live. No one. Okay. So with that, we thank Ethan and David again, for the Q&A for ourselves. Yeah, but we hope you find it valuable for your for your own investments and account opening. But all is not end. So if you still have questions with regards to these topics, feel free to post them, and we will address them during the next episode. So Ethan, go to the next last slide. Yeah.
Okay.
So as always, we'll show this slide, which is the QR code. If you scan this QR code, it will lead you to our landing page where you have direct access to our social channels, which is our website, YouTube, Facebook, and our Telegram channel. So for our Telegram channel, if you join, you get to see the list of resale insurance policies that we have. Should you want to find out more about these policies, feel free to reach us via our Telegram channel, and we will be in touch with you. Okay, so speaking of the next episode, join us next Friday, 5 p.m. for JEDi episode 14 on investments part 3. If you like our content and be notified for future episodes, do like our Facebook page and share this post. We will see you next Friday, and
May the
May the finances
be with you.
be with you.
okay, goodbye.